Hi, this is Mark. Welcome back to my channel. Today I'm going to talk about one of my all-time topics: mortgages, real estate finance, loans. I know everybody loves that. First, if you could do me a favor and hit the subscribe button, then I'd really appreciate it, and let's get started. So I'm in the process of working the last 3 mortgages that I'm ever going to apply for in my life. The first one is dead simple. It's on my personal residence, so it's really easy. There's not a lot of qualifications, and I'm getting a great interest rate. It's 2.5% for 15 years. What's great about that is that every month the payment is about $1,600, and of that, $1,100 goes directly to principal. There's only about $500 that goes to interest, and within the first year it will be under $500. That is absolutely amazing. Now, I don't want to be caustic or critical, but let me say this. If you're living in a house or a condo that you own your own home and you have a mortgage on it and you're paying more than 3% and you're not in the process of refinancing, then I think you're absolutely out of your mind. Interest rates are so low now and it's so easy to get financing. Everybody should be doing it. I love the 2.5% rate, and that's a mortgage that I'm never ever going to touch. Now, the second loan is a little bit more complicated, and it's in process right now. It's on a house that's out of state. It was originally intended to be a house that I was going to buy and fix up and sell, and the buy and fix up went okay. There were a lot of problems, but I eventually did get it fixed up and it looked really nice, but I couldn't quite get the amount of money on the sale that I felt I needed. So I ended up taking it off the market and renting it. And that worked out pretty well for about 2 years. We were making pretty good money, probably about $600 or $700 a month. And then there were some tax benefits as well. The interest rate wasn't great because it was a loan that I just had to get, and because I had to remove a hard money loan. I had a high interest loan that I had to get rid of. So I took a 5.75% loan for 30 years. It wasn't terrible, but it wasn't great. So I had the same tenant in there for 2 years, and then they moved out, and with COVID and the time that they moved out, it was the fall, so it was hard to get somebody in there, and it's a bigger house in a luxury house on a golf course, so the market is smaller for that. It was tough for my property manager to get it rented, so we ended up having to drop the price by about $500 a month, which really, really hurt. So I told the property manager, I'll take that rent for a year, but if we can't get a pretty substantially higher rent when this tenant lease expires, then I'm just going to sell the property. It's not worth it. And that was then when the interest rate on my loan was 5.75. I tried a couple of times to get it refinanced with the company that had the loan, and they would offer me a slightly lower interest rate where I could save about $100 a month, but they wanted $10,000 in closing costs. So when you look at that, it would take me 100 months to recover my closing costs. That's a terrible deal. And they kept promising they could do better, and then they wouldn't close the loan, and they'd offer me a garbage rate with high closing costs. And I finally just said, forget it. So I went back to them one final time, and what they ended up doing was they ended up getting me a rate of 3.65, so more than 2 percentage points lower with only $8,000 in closing costs. So it's only going to take me about 3.5 years to recover those closing costs. Based on that, I've changed my mind. At 3.65% for 30 years with a payment of around $900, I'm going to keep that property forever. I've changed my mind. Even if I can't get higher rent than what I am now, I think I probably will be able to, but if only it's a little bit higher, I'm going to keep the property anyway. Now that loan is now in process. There have been some hassles with that too. Originally, because it was with the same company who just did my personal residence loan, they have all the documentation they need because I just did that loan 2 months ago. I've only made 2 payments on it. And so they told me, well, you only have to give them 1 payment stub for your job. It's like, okay, fine, that's not too bad. Well, that wasn't true. Then they wanted me to send them every mortgage statement for every property that I own. Okay, well, that's a hassle. That's 9 more property statements. Then that wasn't even enough. Then they said that I had to upload all the homeowner association fees. It's like, okay, well, and I finally told the guy, look, if you can't get this done, then I don't want to pay the closing costs. I don't want to pay the commitment fee of $500. And he said, okay. So I think he's probably going to get it done. It's in underwriting now, and we're probably going to close in about 30 days or so. That leads me to the third and final and probably most important mortgage that I'm working right now. I've talked about this a little bit in the past. It's on the 28-unit apartment complex. I wasn't sure that we'd be able to get it done. I put all the paperwork together, a lot of spreadsheets. The financials look frankly terrible to me because of the property managers who did a horrible job for almost 4 years. But that's not where I got pushback, so it may not be a problem. Where I got pushback is that the lender won't even talk to me until we're at 90% occupancy for 90 days. So that means we need 25 of the 28 units filled. Right now we're at 23 units, so of the 5 vacant units, we only need to get 2 rented, and we actually have 2 that are rent ready right now. One is a super nice 1-bedroom unit. It used to be the apartment complex owner's unit where he stayed. It's a huge 1-bedroom with a fireplace and an upgraded kitchen and upgraded flooring. It should go really fast. I'm not worried about that. The other one is just your average normal 1-bedroom. That's going to be a little bit harder. But I did talk to my property manager and I impressed upon him this is really the most important thing that he needs to work on right now. And I told him that first of all, we're going to use the proceeds from the refinance in order to buy another property that he's going to get to manage. So it's going to mean more work and more money for him. That's number one. Second is that it's going to lower our monthly mortgage payment by about $2,000. So that's going to take a lot of pressure off him in terms of the performance of the apartment complex. Instead of $5,400, it's going to be $3,000 and change a month. So there's a lot more margin for error there if he can't get certain units rented or their expenses that came up. And he absolutely and immediately understood this, and he said he would do whatever he could to get it done. He would start taking a personal and close interest in getting these units rented. He would ramp up the marketing even more, and he'd start looking at offering incentives, maybe a free month's rent or some sort of a moving special to get them rented. So that's good news. Those are the 3 mortgages that I'm working on right now. If you have any questions or comments, I'd love to hear what you have to say. Leave them down below in the comments section. My name is Mark. If you haven't already subscribed, I would appreciate if you could hit the button, and I'll see you next time.